Hello and welcome to part 3 of our VITA Services for West Michigan Federal Tax Law training. This information is going to cover the income section and all the different content you'll see in concern to the different forms and what that looks like in the software. So we're going to go ahead and jump right into some content here. Again, I like to preface everything with a 1040 form. The software doesn't exactly follow the 1040 form as you see it on the screen, but a lot of people are used to filling one of these out. So I do like to preface it just so that you have a good understanding as to where we're at in the tax information outline if you're used to filling out a 1040 form. If you're not, this is the income section. We're going to be jumping in and going line by line for each of these items as they pertain to what you'll see at the VITA site. We'll give examples of what this income is and what it looks like as far as the printed documents that you'll be provided by the taxpayers when they come in. And you'll also see what that looks like in the software a little bit. So before we start talking about income, let's figure out first what income needs to be filed on the tax return. So in the 4012, it gives a really good outline as to who and what the different requirement amounts are. Typically, they say if you receive cash income for a small business or self-employment, that if it's over $400, you're supposed to file a tax return. If you're receiving Social Security benefits that exceed $25,000, or if you're married filing joint, $32,000, you're supposed to be filing a tax return. Anything, if there's any sort of advanced premium tax credit or anything that's purchased for insurance through the marketplace, which we will get into more information later on. But if that's the case, then you're supposed to file a tax return. And then also if you take any sort of distribution of a retirement or a pension plan, an annuity, and you're not 59 and a half, then you're supposed to file a tax return. So in short, if anybody comes in and indicates that they want to look at filing a tax return, we'll go ahead and look at it to see if there's anything that we can file for them. Even dependents, if they have income of $6,200 or more right now, and these are some ballpark figures, but if they have income higher than that, they have to file a tax return. But we always want to look and see if we can file a tax return for somebody, as long as they've had any federal wages withheld, or as you'll see when we get to the state income tax information, there may be some state credits that the person is qualified for, even if they don't have taxable income. So we do like to look at each person's circumstance and see what we can get back for them. As I indicated, we want to make sure that we're filing any sort of tax return, even if it looks like somebody's worked a very small amount of time and they don't have much earned income. If there's kids in the house, then that earned income credit can get pretty big pretty quick. There's also the additional child tax credit. There's education credits, and of course, if there's anything that's filed with the ACA or the Affordable Care Act, then we absolutely want to make sure that we're not forgetting anything or omitting anything from a tax return. So it's worth it just to take the time to go through the person's income sources and their housing situation to see if they should file. So let's go ahead and jump into some of this federal information. Now keep in mind we will have a specific training on the state income tax, which a lot of just flows over from the federal tax form. So we will have a separate training on that, but keep in mind that you only have to put the income in once for both the federal and state training, and so that's why we spend so much time going through income sources on the federal side, because this is really the place where you'll have to put in the most information when you're completing the tax return in our software. So there's a lot of different income sources, but VITA doesn't prepare every single kind of income source. We're really looking at completing fairly simple tax returns for people. So what we're seeing most of the time at the tax sites are W-2 forms, tip income, something that's reported on what's called a 1099 miscellaneous, and that's basically where somebody has just been provided some sort of income through cash. It might be through a private contract at a company. It typically isn't somebody that's a regular full-time employee but has been paid for a service. There's investment income that we see, and all these numbers and forms that are written behind below the income source, that's what the form is called, and that's what reported on. We're going to go through and show you examples of what each of these forms look like. So under retirement income, you see 1099 SSA or 1099R. We'll go through each of these forms and what's going to be expected to be on each of them. So don't get too intimidated. Like I said, what we see at the tax sites are usually very, very basic. So let's jump right in. Some of the things that you do not have to count, these are the things that we see most commonly at the tax sites, and I like to spend a few minutes going over this so that there's no confusion about what does and what does not get counted for taxable income. In your publication 4012, there is a specific list of the non-taxable income, so forms of income and money that do not have to be counted on the tax return, as well as forms that do. So if you're ever not certain, especially when you're going through some of your practice problems, there's a really good comprehensive list in your 4012 book. But just to touch base on a few of the things that we see very, very commonly at the tax sites, but that do not go on the tax return. This is a full list of those items. I highlighted food stamps, child support, Social Security income, so just straight SSI, as well as TANF or cash assistance it's sometimes called, any funding that comes from DHHS that is provided for welfare type recipients. So none of that income needs to get reported on the federal tax return. Again, it's hard to keep in mind. It can be overwhelming if somebody comes in and has just a bunch of random tax return information and tax forms, and it's from several years. So keep in mind that one of the biggest things you can do to kind of help yourself and the client is making sure to help them organize their documents. So you'll want to make sure that you're keeping out anything that's coming from any employers or any banks, and you'll also make sure that you'll want to see that the correct tax year is on all of these tax forms. If somebody comes in and they have a bunch of receipts because they've owned a small business, if they don't have that information put into some sort of order that you can realistically go through within an hour, then it is okay to ask them to get organized and to come back. You may need to give them a few pointers on how to get organized, and this information in this section will help you, as well as some of the exercises that you'll do through the 4491 and your certification exam. Again, any of the taxpayer information that the clients come in with, they should have received by January 30th, or it should have been mailed by January 30th. Sometimes people come in and they indicate that there's a tax form that they're missing. If they haven't received it, then they absolutely need to call and contact the company that they're waiting on the tax form from, and I recommend not starting the return until they have all of their information put together, because there's no point in starting the return if you can't finish it. So we'll go ahead and jump into the most common types of income and what you're typically going to see at the tax sites. So W-2s are the number one source of income that we see. Again, every employee should be receiving a W-2 if they've worked for an employer, and they should receive that by January 30th of that next tax year. It's reported on the W-2, and we absolutely have to have the W-2. We can't use like a pay stub from the last pay period of the year, and that's just because there's a lot of information that's on this W-2 that we have to put into the software. That big piece is what's called the employer identification number, or the EIN, and that's almost like a social security number for a business. So it helps identify who the business is to the IRS, and the IRS requires that that information is reported on the tax returns. So there's almost always tax withheld if income is reported on a W-2, and that can be found in box 2 on this W-2 form. We're going to go to an example in just a moment so you can see these various parts and pieces that I am talking about. Just know that this information is vital to filling out a person's tax return correctly, and that each W-2 needs to be input into the software individually. The software will calculate all the totals though, so don't worry about totaling it up. So I did just preface a lot of this information, but I wanted to go through, I'm a very visual learner and I know people learn in different ways, so I wanted to make sure to point out these important pieces and what you're going to find on the W-2 form. So again, this is an obviously outdated W-2, but right here you'll see it says 2011. You're not going to want to use that for the upcoming tax year if somebody brings in a form that looks just like this. But as long as that says the correct tax year on the bottom, then you should be good to go. I had indicated that there's the employer identification number, which we have to input into the software. That is typically up in this upper left-hand corner. You'll see the wages over here. Typically, these wages will look they'll look the same all the way down as what they're called wages, Social Security wages, and Medicare wages. Keep an eye on these because sometimes they do vary a little bit though, and that's fine. It doesn't mean that there's anything to be concerned about, but if there's some information in this section, then typically these boxes in box 3 and 5 change. So basically what you're doing is you're just inputting the information directly from the W-2 into the tax software. So don't worry if those wages, if that information is just slightly different. I would just put the information that's reported on this W-2 just as it's printed into the software. So in the upper right hand corner you can see this is the tax that was withheld. This is really important, and I know it kind of goes without saying, but just make sure that you're entering all this information in correctly and that you're being very careful that you don't have any typos. Also, the software will want you to round, so you don't have to worry about putting in decimals and cents signs. You can go ahead and round up or down, just like learning in school. Keep in mind, sometimes there's information in boxes 11, 12, 13, 14. Again, the software will allow you to put those boxes in. And then down here in the bottom, across the bottom really, is state information. So don't forget to put that into the software as well. So even though you're starting to fill out information on the federal side, if you put this information into the software, as long as you're putting it, along where you're putting the federal information in, it'll flow directly to the state tax forms. So when you get to the state taxes, there really isn't much information you have to put in, and it's a really quick and easy process. So earned income, self-employment income, it's called a few different things. So you may have somebody come in and report this income in several different terms, but do know that you'll want to be certified at the advanced level to do this. And it's actually kind of a fun little exercise to go through. You'll see in the practice problems that there's a couple of examples of what we call Schedule C income. It can be anybody that has income reported on 1099 miscellaneous forms. It may be a personal business that they own. It could be a freelancer, somebody that works for themselves, or somebody that just earns cash on the side or under the table. So those are all very different terminology for it, but that's what it is. You're supposed to report that income always on a Schedule C. So sometimes if somebody does a lot of contracting, they'll be provided what's called the 1099 miscellaneous form, and that's for somebody that they've done work for, but they still have to file a Schedule C for this business that's actually their personal business. So we can do very few things on as far as the Schedule C goes, so I like to just review what's in scope really quick. When somebody owns their own business, it can get very complicated, but what we do at the tax sites is usually pretty simple. So I like to outline what we are actually trained to do and what we know how to do. Anything that's beyond this, we refer people to go to a paid preparer to have a paid preparer to go through. And that's just so that you don't miss anything on their tax return and so that they can benefit from all the possible deductions that are possible. So what's out of scope for VITA? If there's any sort of expenses or earnings of $10,000 or more, if the business has continually had a loss, if there are additional employees, so if it's anybody beyond the business owner themselves, if they have contracted employees, this is all out of scope, and this is where we would start referring people to go to a paid preparer. There's also if there's any inventory or cost of goods sold, any property, because that starts dealing with depreciation. Those are areas that are kind of out of our scope for VITA and that I would not encourage you to look at because you obviously are not certified to do that. We can, just so you know, we can look at just a standard mileage rate. So there may be some automobile expenses we can look at, and we can look at some things pertaining to driving. But again, if there's any sort of depreciation, that's when we want to start referring people to go to a paid preparer. So I had indicated that sometimes somebody may receive what's called a 1099 miscellaneous form. I just wanted to give you an example of what one looks like. This is typically how they're all printed. The big piece is that there's going to be in this box 7, that's the non-employee compensation. So you'll want to add that and compensate for that being part of the income coming into the business. One thing, like I said from the beginning when I started talking about Schedule Cs, is that clients should have records of all of their income and expenses. If they don't, preparing the Schedule C for them is nearly impossible, and you want to encourage them to go home and get all their information together and organized, and they can make an appointment after that point. These Schedule Cs can be pretty easy to go through, but the client has to have their information organized. If that's not the case, then it's pretty impossible. So just if you have any concerns with the organization, or if a person has everything they need in order for you to prepare their Schedule C, if it's your first one you're preparing at your tax site, let your site coordinator know. But like I said, if they have all their information, filling out the forms in the tax software really is not too terribly challenging. There are a lot of different expenses that clients can account for to make sure that they are getting all their deductions. So basically what happens in a Schedule C is a person obviously doesn't pay tax unless they have paid the estimated taxes, which we'll talk about a bit later. But typically the tax preparer has not paid anything yet. So what you're doing is you're accounting for all of the income coming into the business, and then you're also using all of the deductions to reduce that taxable income so that you can get the tax rate and figure out how much the client owes for tax on their business. So there's a full list. You can print out a Schedule C form. That's really easy. There's also in your 4012 book this full list also. But there's a lot of, these are the most common things that we typically see at the tax sites that are within the VITA scope. So advertising is huge. We can take a standard mileage rate. Again, that's where it's really important, where a person keeps track of their expenses. And then one thing too with the standard mileage rate that I like to point out is it has to be between job sites. Now keep in mind this will be a specific topic that's covered on your certification, so don't forget that it's not between between home and one work site. It has to be between different work sites. So I know that's a little bit confusing. Why don't I provide an example? So if John works from home and prepares some of his tools and stuff and goes out and does estimates for different contract jobs and works at a few different job sites where he's a private contractor, he can go ahead and count the mileage from his various job sites. So once he leaves home and gets to the first job site, he can count all of his travel during the day with the exception of driving from the last job site back to home. And if you think about it, it kind of makes sense. No one else can claim their mileage from just driving to their work site, but if you travel for your job, you can typically get mileage from traveling to meetings. So from job to site, you can count that mileage. Make sure that somebody has written documentation if they are counting for that, and that's just to kind of cover themselves for any liability in case the IRS does want to audit them or wants to complete what they call a review. It's good to have, it's actually necessary to have these paper documents and have everything documented by paper, have some sort of a paper trail. People can also deduct insurance, interest on loans, any sort of office expenses, phones, all of those general labor supplies, so a lot of tools. There's any sort of meals and entertainment, utilities, anything like that. People, as long as there's, like I said, that paper trail, you can utilize anything on this list and anything that's listed in the software to go ahead and, and count to reduce that taxable income. Also, I know I just covered a lot of the mileage information. Make sure that there's the written documentation of this. It can be used if somebody's just visiting customers, and make sure that it's a total, um, that the written documentation totals the miles and has dates, and it should have odometer readings and mileage on it. This is just an example of this log that people are supposed to keep. We've often helped a lot of people at the tax sites learn how to keep this business log, and I can say that we don't see a whole lot of self-employment. We don't do a ton of these Schedule Cs, but we do enough of them, and they're fun, and we've actually helped a lot of our clients get organized and really understand the Schedule C so that they come in really prepared and knowing exactly what to expect with it. So there's, like I said, there's some other expenses and there's some other alternatives in calculating mileage. It typically, for the clients that we're seeing, is not much more advantageous. So the standard mileage rate is fine to use for the majority of our taxpayers. But if you've got somebody that's had a business for some time and they're starting to inch near that out of scope range, we would just recommend for them to maybe just go to a paid preparer, because we want to make sure that somebody is getting all of their tax benefits that they can. And if it's anything out of what I've been discussing with the self-employment information, then it's out of the VITA scope. So that is Schedule Cs. Again, your practice returns and your certification test will provide a really good background and understanding for that information. Investment income, we see a lot. We do tax returns for a lot of people who are retired. So they'll come in with what's called interest or dividend income, and that's basically income that they've earned on their investments. So it may be passive. It's all the same. You can hear different terms for it. Sometimes someone will just say it's my bank statement, and they're referring to this 1099 interest or 1099 dividend form. There's capital gains and losses. That's a form of investment income as well. Those are reported on 1099-Bs. And that's basically where there's any sort of selling or buying of stocks and any of the income that's gained or lost on that. And I will say that this is, our new taxware system is a lot easier to utilize these forms within. There are partnerships, but some of these can get kind of complicated. Take a look. It's reported on the Schedule K1. You can definitely only do this if you're advanced certified, but take a look at it. If you aren't, talk to your site coordinator, and if you're not comfortable completing this tax form, contact Carl Lewis, our program coordinator, and he can identify if this is a form that we can complete at our tax site or not. So I had mentioned these 1099 interest statements. They're actually really easy to put into the tax software and to account for this income. This is obviously an example of one. They all basically look very similar to this. I haven't seen too many forms that look very different or that are too confusing. So this is always a welcome income form. Usually it's only boxes 1 and 2 and 4. You can see I'm pointing at them here on the screen. 1, 2, and 4 are the areas that you have to account for. And in the software, it typically also wants this federal identification number as well as the name of the payer. So that information is pretty simple. And the distribution forms, the 1099 dividend statements, also look pretty similar. So again, you'll want to pay attention to this federal ID number. It's usually printed right here on the form along with the payer. And then just boxes 1, A and B and 2 are typically all you see, sometimes boxes 3 and 4. Don't miss any of these boxes. They will align in the software, and the software will ask you for the specific title. It'll say total ordinary dividends, qualified dividends. It lists everything right out for you, so it's not too confusing. So dividend and distributions. Dividends are technically, and I like to provide just a brief definition so that people have an understanding of what that investment income actually is it's corporate distributions that are paid out of earnings from profits of the corporation. The qualified dividends are when there are ordinary dividends that are eligible for a lower tax rate. And so that's the difference between them. The software will calculate everything. There's not really anything that you have to do or know, but I do like to give definitions so that people have an understanding of what it is. But it's just located right on the form, so it's pretty basic and simple. Now, the investment income that gets a little bit trickier are capital gains and capital losses. They're reported on forms 1099-Bs or 1099-Ss. I will say that the most challenging piece to utilizing and working with this source of income and this investment income specifically is just that the forms look a little bit different, and sometimes you have to go through and look at summary sheets, and sometimes they'll be very basic and they'll be 3 pages. Sometimes they'll be 15 pages. It just kind of depends on the person's portfolio and what that looks like, how long they've had it, as well as the different companies. So the investment incomes from the capital gains and losses are usually from stocks and bonds. Sometimes they're from mutual funds, and every now and then you'll see a sale of a home. There's a few different things that you have to know, and the software is going to prompt you as to where to find this and what you're looking for in these documents. But you have to know the cost basis, so the original cost of the stock or what was being bought. You have to know the adjusted basis. So that's the original cost of the asset and how it either increases or decreases. And that's based on commissions, fees, or other pieces of the investment. And again, it'll say it directly on the form. It'll say the original cost basis, and it'll say adjusted cost basis. So it takes the guessing work out of it, but it is just good to know what these are in reference to looking at these forms. You'll want to take a look at the holding period. So whenever there's a capital gain or loss, there's either a short-term or a long-term holding period. A short-term is if somebody has bought that investment or that stock and they've had it for less than a year, and a long-term is anything that's over a year old. And then anything that's inherited assets, they're considered long-term, just so that you know that. This is typically what that 1099-B form looks like. So I don't want to scare you too much. As I indicated, it looks a little bit intimidating, and a lot of the time there's paperwork that surrounds this information, but this is really what you're looking for when you're looking at a capital gain or loss or Form B. So again, as I indicated, there is the date of acquisition and the date that it's sold. So that tells you how long the person had it, so you can identify if it's a long-term or a short-term. It's also going to say it on the paperwork right up here. And like I said, while all forms are kind of different, you'll see this general layout of the actual stock information. Now, there may be forms in fine print that explain what the stock is, and that's what varies the most, but this is really what you're looking for whenever you see that somebody has a stack of a capital gain information or something from some sort of stock portfolio. So that, again, that date on there will tell you exactly how long or short the person has had it. That cost basis is right over here, as well as the adjusted cost basis or the sale price. Oops. And then whether it's a gain or a loss. So it's actually pretty basic and pretty easy. Just know that that it's really important that somebody has their documentation. So this is a brief example I like to give people just so that they can go through it and kind of process this in your head. If the client, also to keep in mind, if the client doesn't have the proper documentation, then we can't do the return. Now, I haven't seen too many people come in with 1099-B forms that don't have the information that we need, but if for some reason the cost basis is not included on the forms anywhere, and the person doesn't know how much the cost of the stock was when they bought it, then you can't complete the tax return. But the portfolio companies and the investor companies have gotten really good. I haven't ever really come across that problem in the 6 years I've been working on taxes. So I don't think that's anything that you'll find. You may need some help in working with your site coordinator with identifying some of this information on some of these forms, but I really don't think that's going to be the case either. Once you get one and two of these under your belt, you'll get pretty comfortable with them. They're really not as intimidating as it initially looks. So For example, let's take a look at an example that I have up on the screen. If you purchased 100 shares for $2,000 and there was and you had to pay $50 to complete the transaction, then the basis is now 1,950, and the basis of the share per share is 1950. Also, if the stock splits and a corporation lowers the market prices, you can turn your 100 shares into 200, and the basis will now be half of what you paid. So now you own 200 shares, and that basis is at 975. It's a little bit easier to see that when you have that 1099-B in front of you, but you'll get used to going through some of this information as well. We have seen these more increasingly at the tax sites, so I don't want you to be intimidated by them. I know right now, just for your general knowledge and as you're kind of gaining just information generally on how the various income forms work, I know this sounds a little bit convoluted and complicated, but I promise you, just work through a few of these practice problems and it will make more sense. If there's more information that you'd like, your 4012 form is very helpful. There's also the link learncertification.com, but that is basically capital gains in a nutshell. The last thing I do want to make sure that you know about capital gains is if somebody has had a very big loss, so if they had a $20,000 loss 2 years ago, they can claim up to a $3,000 loss each year that carries over until the $20,000 is fulfilled through various tax years. So typically people come in and they've told you this and they know this. Also, a good indicator of knowing if somebody has a capital loss is if they come in and bring in their prior year tax year and you see that there's a negative $3,000 on their capital gains or loss line of their tax return. I think that might be line 10, or it's actually line 13. And if they have a negative $3,000, that might just prompt you to say, do you know if this capital loss was fulfilled or if you'll be taking another loss this upcoming tax year? Again, your site coordinators can help you with this. It's not too terribly complicated. You just kind of have to know the right questions to ask and to kind of get used to working with the different forms. Inputting it into the software has gotten much easier over the years, so I think you'll find, especially if you're a returning volunteer, it's much more simple than in our previous type of software that we used to use to input this capital gain information. So we're going to jump into retirement income. So there's a lot of different forms of retirement. Most of the time they're all reported on this 1099-R form. So that could include an IRA, a pension, an annuity. Another form that we'll talk about is the 1099 SSA form, or Social Security form. So these are all called various things. I don't want to get people too confused. Sometimes the taxpayers will say, I don't have a pension, I don't have a pension, but it's an IRA and it's all reported on the 1099 form. So it might be just easiest to refer to this as retirement type income. Also keep in mind as we're going through this that Social Security income, SSI, that's never on this federal tax return. So it does get a little bit confusing and we'll go into more detail, but just keep in mind SSI is never on the federal side. So let's talk about this retirement income. So again, somebody may reference this as a 1099-R, they may reference it as a 401k, a pension, an IRA, an annuity. All of these things are all reported on this 1099-R. The big piece that's going to make the difference between whether it's a pension and an annuity is this distribution code and having this piece checked right here. But the income is just listed in boxes 1 and 2. Make sure to keep in mind if there's a box 4 that's filled out, just don't miss any of the boxes that are on the screen. In the software, it prompts you to be able to input this information from the forms that you're looking at with the taxpayer. But it's a pretty straightforward, pretty basic form. You're basically just transposing the information. There's nothing that you have to calculate or figure out. Just again, make sure that it's for the correct tax year. Sometimes there's a distribution and only a portion of it is taxable. So make sure that you've gone through and that you're indicating if it's a taxable amount and if it's a total distribution. This information is found directly on the form. So again, it's not too tricky. But if there is any information in box 2, just know that you have to have an advanced level certification for this. So it indicates that that the tax-wise software, we're using TaxSlayer, but that software calculates what's taxable and what's non-taxable based on the code that you put in from this form. So if you go over here, this distribution code is huge at dictating what sort of implications this income has on the tax return. So make sure you don't miss that code and that you're putting it in correctly. As I indicated, their Social Security income, so regular retirement Social Security that's coming from the Social Security Administration, that's reported on the federal form, and sometimes there's some information. This is what the form looks like. It looks the same for just about every year. This box that's gray in this example will actually be pink, and that's one of the ways that I tell people that you know the difference between SSI and SSA. SSA only comes on this form and has a pink box, and this is the only sort of Social Security that ends up on the federal side. So the amount that you'll put into the tax software is the amount that's in this pink box that just says, it's box 6, it says the Social Security benefits. You don't necessarily put in this box 3. Make sure that you're using the one that's highlighted because sometimes these vary a little bit. Also keep an eye out for what's in box 6, and that has to do with anything that was withheld. It's not very common, but every now and then, especially if it's a married filing joint return, if both spouses receive Social Security, that puts them in a position to sometimes, depending on how long they've worked, to want to have some federal tax withheld because they may actually have to pay tax depending on how much Social Security they're earning. So just keep that in mind and be cognizant that there may be some federal withholding right here. And that also may depend on the person's tax situation with some of their investment income as to why they have some federal tax withheld. Over here, there may be some information that's listed. It may indicate that the person has had some income withheld from this piece. There's a spot in the tax software that will ask you for any of the Medicaid, and those are listed right here. It may be Medicaid Part A, B, C, or D, and you'll want to total those figures and put them into the software. Again, this is just an example of the SSI that does not go on the federal tax return. So if somebody comes in with this income document, know that this only goes on the state and that this does not go on the federal tax return. That's all I'm going to say about that right now. There's a whole section on Social Security income and the state tax training, but I don't want to confuse you. So just keep in mind that SSI does not go on the federal tax return. I've gone through, those are the biggest sources of income that we typically see. These are some other ones that are sources of income that we'll go through briefly. There's unemployment, there's gambling winnings. Every now and then we see somebody with jury duty earnings. There's also alimony payments that are taxable, prizes and awards. So sometimes somebody wins something from like Publisher Clearinghouse or another source of income like that. And then there's academic fellowships or scholarships sometimes. If those get reported on a 1099 miscellaneous form, then those also have to be accounted for on the federal side of the tax return. So I indicated that there's unemployment compensation. Again, there's not really anything you have to figure out. It's just inputting information from the income source document that the taxpayer provides into the software. There will be a federal identification number right over here that you'll have to put into the software, as well as the unemployment compensation. Keep in mind that there may be federal withholding, so you don't want to miss that. There may be also some information in any of the other boxes, but that's not typical. So you'll probably only see boxes 1 and 4 filled out with the unemployment compensation. Jury duty income is taxable. So if you receive a year-end statement indicating that you've been a recipient of jury duty income, you do have to report that on the tax return. And it's just under the other income section in the tax software. The last piece I want to talk about is the cancellation of debt. This used to be a separate certification through VITA, but we're now including it in this advanced training. So with our cancellation of debt, typically that's just indicating that there's been some sort of debt that's been forgiven to the taxpayer. A lot of the time the debt is related to either business activity, it may be related to bankruptcy. Typically when somebody becomes insolvent, they have debt forgiven, and that could be anything from education debt to any sort of medical debt to credit card debt. Right now, the only debt that we can work with within the VITA scope is credit card debt, and it has to be a very low amount. So if it's anything other than that, then we have to refer the person out to a paid preparer. Also, if it indicates that the taxpayer is insolvent, then we have to also put that, we have to refer that situation to a paid preparer as well. What does insolvency mean? It basically means when the client owes more than their assets. So that they're just completely in debt. If that's the case, it gets kind of tricky, and you don't want the person to be charged for all of that coming in as income, and that's why we really want to make sure that we're actually doing a favor for the client, and that could mean that referring them out is to their biggest benefit. So dealing with anything aside from the canceled credit card debt is not anything that falls within the VITA scope. But in the tax software, it's pretty easy. You just, under other debt, it may show that amount that's forgiven. So this is the form. This is the cancellation of debt form that you'll see. Again, you'll want to make sure that it's of the same tax year. And you just basically have to look at the date and then this box too, and that's how much of the debt was discharged. So if it's just $450, again, that's something we can do at our tax site because it falls under $5,000. We can take a look at that. And then two, it'll say what it's for. It's pretty obvious if it's something like some sort of education loan because it's so high. And we have seen them. We've had people come to our tax sites that we've had to refer out because that's their circumstance. But the debt description should be listed here, and it should indicate if it's credit card, if it's medical, and that's where you can really identify if that's the source that you can work with or not. Gambling winnings, those are something that we get a lot of questions on. So again, that's on line 21 if you do a federal income section, if you're working with the federal 1040 form, but in our software it'll just ask about gambling winnings. The person does receive some tax forms if they've received gambling winnings. Sometimes you have to enter several tax forms, but the software will total all that information for you. Keep in mind, a lot of people will ask about deducting their gambling losses. We will get into a Schedule A, but you can only do the information for the losses if somebody is itemizing. So keep that in mind, and we'll go through what a Schedule A is and the itemization and standard deductions and itemized deductions in actually our next section, our next training. But just know that it's not going to be to anybody's benefit to total up losses unless they're itemizing. So if somebody comes in and they have no taxable income, then don't worry about gathering up any of the loss information. I will say that some of these gambling winnings, these 1099 or these W-2Gs as they're called gambling winning forms. They have a lot of information on them, but it's not too tricky. Again, you just transpose all this information from this form directly into the software. These forms look pretty similar. They vary just slightly from different casino to casino because they all print their own. But you'll see this is the basic information that's on all of those those W-2G forms. So those are the major forms of income that we work with. Again, a lot of this is just going to come from practice, but knowing exactly what sources of income we can work with, what falls within scope. I hope this answered some questions on some of these pieces and what to expect with the software. In the new software, it's going to be pretty easy. We've just started working with that software system, but I found that in putting this income information is actually pretty easy. So if you're new tax preparer, you're in luck. If you're a returning tax preparer, I think you'll actually find it a bit easier and easier to find forms and go through and answer information. So be sure to watch the next part, our Module 4 on the upcoming deductions and exemption information, and make sure to get your practice problems in. That I can't tell you how valuable that is in going through some of the practice problems that are done in the software that are also listed on our VITA Services volunteer page. So thanks again for watching and have a great day.